If your business does not have a business line of credit, you're leaving yourself and most importantly, your business exposed. I'm going to give you a few reasons, 5 to be exact, why a business line of credit is very important for you to have. Number one is cash flow management. So, what is cash flow? It simply means money's coming into the business and money's going out. It's all the income that comes into bucket A and all of the expenses that need to be paid out in bucket B. And bucket C is what's left over. You need to have a bucket C. Most businesses at the end of the month, the quarter, midway through the year, or even worse, at the end of the year, they never realized how much money was going into bucket B. We all know bucket A because money comes in, but we never see what's going into bucket B. At the end of the year, we're trying to figure out where did the money go and why is our profit margins so low. So it's very important to manage your cash flow. And there are times when your cash flow will not always have supporting income coming in, but your expenses are always going out. And that's why a business line of credit is so important for your business. Why? Because a line of credit for your business will help you get over all of the expenses that you have in place when you're not bringing in enough income. And guys, that's normal. That's what a business goes through. We have a very awesome month, and then the very next month could be flat or could be at zero, no income coming in. And 2 months down the road, we have a surplus of income coming in. That's why a line of credit is so important because it helps with the cash flow cycle. So if in January you made $50,000, your expenses are $30,000. Yes, you profited $20,000. You have a great business. But what happens when it comes to February and you only made 20, but you have 30,000 still in expense? You're still eating up that 20,000 taken from your profits from the previous month, and then you're hoping and praying in March you have a better month. A line of credit can come in and help cover those expenses in place while you wait for your next payment. Number two, it's just simple. It's opportunities. Opportunities will come your way, and you need to have access to capital. Money is the driving force in business. It's your money and your customers. And how do you service your customers, take care of your customers, and acquire more is with money. It is what it is. It's the way you obtain, help, and keep your customers. Why do I say that? It's simple. You can't have enough employees in place. How can you grow your business? If you cannot manage your customer base with a limited staff, then you'll never grow your business. Your business needs to be grown, and you need to have people in place to take care of your customers, or you need to spend to grow that business. It could be a marketing budget. It could be entertainment. It could be a multitude of things, but you need money in place. So opportunities come with a cost. You need to have a business line of credit to help supplement those opportunities, because you don't always want to use the cash in the bank to cover a new opportunity. A line of credit can step in, and obviously while you benefit off of that line of credit, you pay it back. Short-term use, but very efficient opportunities. Number three is emergencies. Every business will have some type of emergency. It might not be this month or the next couple of months, but there could be a minor emergency or a very large emergency. And that's where you need to have access to capital to pay for those emergencies. There's many different scenarios that can actually happen. Think about your business and what type of emergency could set you back 3 months, 6 months, or even a year down the road because you did not have access to the capital like this, right? Even if you have access to the capital, but you never obtained it, there's still a time. And usually when you need the monies to cover an emergency, you're running out and getting, unfortunately, higher cost debt. We all know those MCAs, those third-party debts that can cost your business. You do not want to have those when you need access to the capital. Having a line of credit in place, tucked away for future use, is the most beneficial thing you can do to cover any emergency costs. Number four, it's separating your personal and business expenses. See, there's so many business owners today, unfortunately, have to use their personal bank accounts or even worse, their personal credit cards to help fund their business. And guys, there's nothing wrong with that, but it's not the right way. You can have a business credit card or a business line of credit to help fund your business while the time is slow. It is the right way. Your accountant will appreciate it. There's not going to be shares you lend in money from your personal into your business where there's going to be a loan payable back to you, right? Banks don't want to see that. Banks want to see that the business could stand on its own and that it has ultimately the support from an institution that's helping you. So, separating your personal expenses is huge from your business expenses. You do not want to carry your business expenses on your personal because one, you're drying up your personal cash, which you never want to do. But then number two, it's simple. You max out your personal credit cards. Now you're unfortunately giving you a lower credit score when you can utilize business credit in the form of a line of credit or even a credit card if you have to support your business obligation. Try to keep your personal and your business separate at all times. It should never commingle. And number five, it's probably my favorite one. A line of credit gives you flexibility versus, say, a term loan. See, a loan, you borrow $100,000 for the bank for 5 years. You have a fixed rate and a fixed dollar amount. But the bank gives you the money right away. You start paying interest on that 100,000. That serves its own intended purpose, but a line of credit for your business, the purpose it serves is for short-term working capital, where $100,000 is given to you, but say you only need $25,000, you're only paying interest on that $25,000 for the month. So perfect example, $100,000, you use $25,000 at a 10% interest rate, your monthly payment is around $250 or $200 in that ballpark range. Now, if you were to get a loan, you would be paying under $100,000. All the money would be given to you. Line of credit gives you the flexibility to use what you need for your business, pay it back, and then reuse it again. It's usually good for a year, and they keep renewing it. As you use your line of credit and you bank with your institution, the bank will be more inclined to trust you and to extend a larger credit facility to you. Lines of credit are an amazing product if used correctly. Business line of credit is one of the most important tools you'll ever have in your business to help you. A bank is there to support you, but a line of credit given to you from a bank is such an amazing product. If used correctly, you can scale your business many times over. I've had clients who've taken small lines of credits and has increased it year over year, where they're doing hundreds of thousands in revenue to now millions of dollars in revenue. A line of credit gives you the opportunity to grow and to expand. As always, if you have any questions, leave it in the comment section below, and we would love to answer it all. Our firm is approaching $100 million in lending transactions, and we know a thing or two about how to get business lines of credits approved.